insurance. It's a similar class of insurance that covers a percentage of debt owed by a client in the event of insolvency. I can certainly say that, on face value, that our rates are a lot cheaper than this sector for comparable amounts of cover. A little bit surprising, actually, is there's multiple insurers within the trade credit world competing, whereas we're the only one sort of within our industry, effectively, and our sort of product covers insolvency. As that's the trigger for the policy, a broad array of things. It's not just one event, a bad debt that will see, a claim against the policy. Last question of Collins. It was a little bit tricky to understand. If I dissolve my company, does this negate the insurance, or does the recent change in insolvency laws change that? So I guess that depends what you mean by dissolve your company. If you've voluntarily applied to Companies House to strike your company off the register, this is usually done on the basis that all debt to the company have been settled and the business has ceased trading. The trigger for the insurance policy is insolvency. So whether this be a creditor's voluntary arrangement, a creditor's voluntary liquidation, or an administration process, if the director has deliberately brought about the insolvency of the business through reckless or deliberate action, they've acted outside of their fiduciary responsibilities, taking dividends where profits have not materialised, etc., which subsequently triggered a call on the PG, then yes, that that would negate the policy. It's the equivalent of insuring a car and deliberately crashing it effectively and expecting the insurer to foot the bill. If a director has notified our support desk of issues, say a material bad debt, for example, we provided advice and our partner professional deemed that the directors would need to put the company into an insolvency process in accordance with the law and regulation. This then prompts a call on the PG by the lender. Then, providing the directors met the other policy conditions, they've kept us well informed of the issue, then no, this would not negate the policy. That's the very reason the director would take cover. We provide support to try and overcome an issue. If they can get through it, great. If not, and the company has to enter an insolvency process, that's when the insurance side of things is going to step in to protect the personal assets. So that's it for Colin's questions. Obviously, if anyone else has got any other questions, personal or insurance related, if they want to find out more about the support services, or Purbeck, the story of how we began, why we're the only competitors in the market, or the only provider rather in the market. If you follow the hashtag, I can't remember the hashtag. You'll have to ask Kat Walsh, our marketing executive, to fill that bit in. But yeah, obviously, most of you will be on our LinkedIn page anyway, so feel free to fire anything over on LinkedIn or via our Facebook page as well, and we'll do our best to answer you. All the best. Cheers. Bye bye.